Today I will be explaining market making. Market making is, as most other forms of automated trading, very misunderstood. However, they play a very big role in the whole trading landscape, so it's important to understand how they operate and what their incentives are, which I will be doing in this video. This video is mostly aimed at programmers that want to be market makers. Even though it's a very simple video, I'll be using very basic real-world analogies to explain what a market maker is doing. You can only really do anything with this video if you then go and try to build your own market making, a trading bot, for example. However, if you're a trader, you're interested in market making, you're interested in what they are, how they think, this video will hopefully give you some insights as well. So as I said, I will be using real-world analogies to explain market making a little bit. And in this video, I will go over quoting, liquidity, the order book, volume, and also volume and liquidity and how they interplay with each other, which is very important to understand because they are definitely not the same. They're literally opposites of each other. Slippage, basic hedging, those are roughly the areas I will cover. So if you're interested in all of them, just stick around. So a while ago I was at Hong Kong at the airport, and while I was waiting for some stuff, I looked around and I saw all these currency exchange shops. So for those of you not familiar, this is what they look like. And what you can do, you can go here if you have some euros, for example, and you want to convert them into something else. So this is actually a picture from Google, and this is actually at the airport in Hong Kong a while ago. And what you can see a screen where they show the prices they offer for buying and selling different currencies. So this shop at the airport in Hong Kong is specialized in Hong Kong dollar, which is their local currency. The idea is that if you fly into Hong Kong and you come from another place, you have another currency, you can go to this shop and you can convert that. And then they will give you Hong Kong dollars. And then you can go into Hong Kong, do some shopping, because the shops, they won't accept euros or American dollars or anything like that. And then you can also, once you're done with Hong Kong and you go to a different place, you might want to convert all your Hong Kong dollars into something else. Right? And they offer to buy and sell these types, these currencies for you. And they have rates for that, as you can see. So here you can see per 100 Hong Kong dollar, per 100 units, I'm sorry, it's not per 100 Hong Kong dollar, but per 100 units, they will give you X Hong Kong dollar. Meaning, if you just flew in from Europe, I'm European, and I use the euro, and I give them 100 euro, they will in turn give me 913.568 Hong Kong dollar. This is great. Now I can go into Hong Kong and I can do some shopping. And once, after a few days, I'm done with Hong Kong, I'm going to fly back, I might still have some Hong Kong dollars left, and I might want to change them back. And imagine I want to get back my original 100 euros. I now need to pay them more Hong Kong dollars. So there's a difference between their buy price and their sell price. And this is called their spread. And you say, oh, that's crazy. The difference is 10%. It's outrageous. They're scamming. And maybe that's outrageous, but keep in mind that they're not a charity, and renting a shop in an airport is very expensive. And as you can see in this other picture right here, like they have a bunch of people, so they're like 1, 2, 3, 4 people, and they all want to get paid. They all need a salary, so you need to pay that as well, right? And the money needs to come from somewhere. So you have a lot of costs. Also involved with, like, you have actual cash in here, so you're gonna need some security and you're gonna need some cameras, and I don't really know how that works, honestly, but I know it's expensive. These shops are basically market makers. They have the same kind of incentives and the same kind of risks as market makers on cryptocurrency exchanges. There are differences, which I will go over later. But first, let's have a look at what is the same with a shop like this. So these shops, they invent their own prices. And to show you what I mean is this was at Hong Kong, and this picture was at, I don't know if you guys can see it, it's like 11 at night. And then I was walking around, and 10 minutes later I saw another shop, and I made a picture of their screen with their prices. Which was 10 minutes later at 10 past 11 at the same day. And here you can see that they were charging a different amount. So if you come in with 100 euros in this shop, they will give you 913 Hong Kong dollars. However, if you come in with 100 euros in this shop, they will give you 8.9 times 100, only 890 Hong Kong dollars. It's a lot less. And that's because they make up their own prices. They just literally invent them. If the prices are too low, if they will only give you 6 Hong Kong dollars for your 1 euro, then everyone will that's a complete scam. I'm not going there. They charge too much. However, if they put their price too high, then they might have a lot of people, but they might not be able to afford all the office and the risk associated with it, which is the next point. These shops, they have a physical drawer or something, or a safety box, or I don't really know what they use, but they have something called inventory, right? They have physical cash in that shop. So imagine that they have 1,000 euros, and then there's a big crisis in the Eurozone or something, and the value of those euros goes down, then they have a problem, right? Because even though they're trading and they're making some money by buying and selling, if the value of those euros goes down harder than that, then yeah, they're kind of screwed. And a practical example is the Turkish lira, which has been very volatile as of late. So this is the chart that shows how much Turkish lira you need to buy $1, and it has been going up, as you can see. And in one specific day, you can see that the price went from 5.5, so you need 5.5 Turkish lira for $1, to 6.4, and that's 20%. It's a crazy amount. So if you are in this market, if you are a currency shop buying and selling Turkish lira, you gotta be sure that you cover this risk, because else you're gonna go bankrupt when stuff like this happens. And as you guys might be familiar with crypto, they happen even more. 20% in a day, okay, that's actually a big swing, but they're not unheard of in Bitcoin. Definitely not. So you want to be sure that you manage that risk properly. And later in this video, I will explain some techniques that market makers use to not be affected by this inventory risk. Something else to take note is that these shops here, they provide liquidity. And what that means is that if people come to the airport and they have euros and they want to change them, these shops, they provide the ability to do that. So they provide liquidity in the sense that you can very liquid, you can transform your euros into something else, into something else, into something else, almost like how liquid water flows, right? Because money needs to be very liquid in order to be usable as a currency. And these shops, they provide you to do that at an airport. So even though there are definitely like fees and there's a 20 over 10% price difference, they still provide liquidity. Okay, so I'm going to stretch this analogy a little bit further to explain a cryptocurrency exchange. Because when you think about it, a cryptocurrency exchange is basically, from the market making perspective, a bunch of currency exchange shops, like the ones you see at an airport. They're not exactly the same. So let me go over and give an example of what it would look like if we have this virtual cryptocurrency exchange that's a website, and if it were to exist in the real world. And that will hopefully explain their role a little bit better. So if you have a look here at this building is in Hong Kong, and BitMEX, which is one of the biggest cryptocurrency exchanges at the moment. They rent their office in this building. And their office is just, there are a bunch of people sitting on computers. But imagine for a second that BitMEX is an actual physical exchange, a physical Bitcoin exchange. How that would work is that they would have the whole building. The whole building would be BitMEX building. And inside it, you would have 1 million little currency exchange shops. And these currency exchange shops, they're the market makers. And BitMEX has a lot of them. But BitMEX has a lot of market makers, similar to how this building would fill a lot of currency exchange shops. So how it works is that you have Arthur here. Arthur, he is the CEO of BitMEX. And how it would work in a physical exchange is that BitMEX, he would go around every hour to all the shops. He will go to floor to all the shops in the building, and he's going to ask them, okay, what are your prices? So he's going to look at the screens, right, of all of them. So he's going to look at this screen, and he's going to look at this screen, and then he's going to compare all of them, and he's going to make a list, right? So he has a piece of paper here, and he's going to write down this shop has the cheapest, has the best rates to currently buy Bitcoin, and this shop has the best rates to currently sell Bitcoin. Because all the shops, they make up their own prices. So Arthur needs to go down to every floor, and as you can see, it's a big building. So it's a bit shit if you're Arthur. But unfortunately, he also gets rewarded for this, which I will go in later. But he goes to all of them, and then he has his list. And he calls this list, he calls it the order book. And exchanges, they actually have an order book. Very quick note, the order book consists of everyone who is currently willing to buy and sell. These are not just market makers. But on big venues like BitMEX, you will probably, I don't really know the statistics, but I would personally estimate that 90% of all the money in the order book, so all the different prices that are being offered to buy and sell at, they are for market makers. And the rest are just some traders that want to get out and in specific prices. Yeah, so Arthur has his list, the order book. He goes every hour, he updates it. Every hour he goes to every floor of the building to update his list to make sure it's still correct. And then once he's done, he goes down and he sits at the entrance of the building. And then whenever there's a trader, so it's someone who's like, I have a suitcase full of cash and I want to buy a Bitcoin. So he would go to the building, and then he would come to Arthur and he'd say, hey, what's up, man? I wanna buy a Bitcoin, please, and I have a suitcase full of cash here. And Arthur, he would look at his list, because Arthur knows all the best prices, and he's gonna make it as fair as possible. So he's gonna look at the top list, and he's gonna look at okay, because I know the shop here on the 12th floor is gonna have the best rate for you to currently go and buy your Bitcoin. So why don't you go there? And then you, with your suitcase full of cash, will go to this shop because that's the best rate, right? So if you look at my screen now, you see the BitMEX exchange, the overview, which you might be quite familiar with. It looks similar to other overviews, but now you have a different understanding of this order book here. This order book, this is the list that Arthur is making. And as you can see, it doesn't happen every hour. It happens a lot more often that it's updated. And every time it updates, or as I'm guessing 90% of the time, it's because these shops, they are adjusting their prices. They're adjusting their quoting because of what's happening in the market. And then on the right, you can see all the people with the suitcases going in. This is 24/7, right? Like Arthur, he makes that money, but he also works a lot. It's 24/7. He needs to keep his list up to date, and he needs to be able to help all the people who want to buy and sell. Sometimes people want to go in with very big suitcases, right? Because these shops, like the shops at an airport, they only allow you to buy up to a certain limit, like maybe a few $1,000s. But on BitMEX, because there's so many of these shops, you can go to Arthur and you can buy up to 10 million worth of Bitcoin in one go. So in one go, you can just come in with a bunch of suitcases with $10 million in them. And you can say to Arthur, please help me out, man. I want to buy some Bitcoin. And he will look at his list. And then he will probably find that in his list, and we can actually look at that right now. We can see, so these are this is the list of people willing to sell, mostly market makers willing to sell. So if you come in with $10 million and you want to buy, you're gonna buy from the shops who are currently willing to sell. And as you can see here, like there's a lot of money. So the size here is in dollars. I mean, there's a lot of money, but unfortunately not 10 million. So actually, let's just zoom out a little bit and group them together. Yeah, so as you can see here, if you're gonna come in right now, in the BitMEX building with a ton of suitcases with $10 million, you're gonna have to go through the list. First, you're gonna you're gonna buy as much Bitcoin from the shop with the best price. Then the second one, then the third one, fourth one, and you will slip into the list, right? You will slip like this, and so this is called slippage, or slipping into the order book. And a practical example of that is this Twitter bot called BitMEX Whale, which will automatically monitor all the suitcases going into BitMEX. And as soon as there is a very big suitcase with a lot of money, it will then report on what happened. So what we can read here on the screen is BitMEX, Bitcoin dollar market, set 6.2 million contracts. This means he came in with a suitcase full with $6.2 million. And then he market bought, so he wanted to buy from the shops that were currently selling. And this was the rate, but he slipped. He slipped almost $6, meaning that in order to buy all this Bitcoin, he got a worse price. He didn't get this price. It started at this price, but then because there was not enough liquidity, there were not enough shops offering to sell at this rate, he had to buy at a worse rate, which is on average was $5.9, so $6, which in the grand scheme of things is not very much, meaning that BitMEX is very liquid. Sometimes it's more liquid than other times. It really depends on what's happening in the market, but this is quite a feat that you're able to right now go to BitMEX with a suitcase filled with $10 million, and you're able to slip only a few dollars. That's very, very tight liquid markets. And yeah, you can see that right here as well. So I zoomed out a little bit. If we were to go in right now, we with $10 million, we would slip all the way. Okay, we would actually slip quite a lot. We would slip up $20. Right? We would need to, like, the difference between the best price and all the other prices we would need in order to fill 10 million is like $20, which is, like getting close to like 0.2, 0.3%. So then you're talking about actual costs there, right? Okay, so taking a step back, if we look at the markets like this, if we look at a cryptocurrency exchange as being this building filled with currency shops, what can we learn? We can learn that all the shops in this building, they are competing with each other. Because the shops, they only make money when people actually go in and buy and sell from them. And BitMEX as Arthur, and Arthur is he's gonna go around, and he's very fair. He doesn't give advantage to one shop over the other. He says, the shop with the best price is gonna go on top of my list. So in that way, all these shops are competing with each other because they all want to give the best price. But as stated before, they need to manage their risk, and there are some costs involved, so they cannot just offer the insanely best price because they wouldn't make any money and they would just have a lot of risk. So they're all competing in finding what is the optimal quote right now, and you can see that here as well. So if we zoom all the way in again, we can see that constantly stuff is flashing and switching, and a lot of flashing and switching happens here at the top, which is at the very, very height of the list of Arthur. So they're all competing with each other. We can also learn that it's very important to be at the top of Arthur's list, because if you're at the top, that means that the next trade, the next guy with the suitcase, he will buy or sell from you, which is great. However, sometimes people come in with very big suitcases, as is shown here. Right, let's see, maybe there has been a new trade. Can I refresh this? Because people with big suitcases, they come in every few hours on BitMEX. It's a very popular building, as a way to put it. No, that was the last one. But here it is 3 hours ago, 4 hours ago, 5 hours ago. And I think this Twitter bot, it only tweets when people go in with suitcases bigger than, I think, like 3 million maybe. Let's see here, 3.5, 4, 5. And then BitMEX has a limitation of 10 million per one go. But you're perfectly fine to go a few times, right? You go 10 million now, and then you wait 5 minutes and you go again. Arthur doesn't care. He wants you to do that most likely, because he gets a little bit of money every time. Looking at that, the limit is probably 3 million. So this bot doesn't report everything, which is a lot more, right? Like all the suitcases, I mean. You can see all of them in the recent trades, which is a few a second. And in total, like on very active minutes, there are minutes when in total all the value of all the suitcases, which is called the volume, that goes in is like $20 or $30 million. Like there's a lot of stuff happening in the BitMEX building. So as I said, all the shops, they want to quote a very good price, because they're all battling for the suitcases. And as you can imagine, if there are not a lot of shops with a lot of suitcases, then you will see that all the suitcases, all the people, all the traders, they will get terrible deals, right? Because basically there's a small cartel or something, not a cartel, but if there's only a small group of these shops, they just all charge terrible prices, and no one really would, and they would screw over all the traders. However, if there are a lot of these shops, they all need to compete with each other. So they will all try to overbid each other and quote a tiny bit better than the next guy, which is better for traders, but worse for market makers, because, right, they all need to share the volume. They all need to share their liquidity with the volume of suitcases coming into the building. And this ratio is like a golden ratio. So when you're a market maker, you don't just per se want to go to the biggest markets where there's the most volume, most suitcases, because that's also where all the other market makers are, right? Like that's also the most competitive. So I am personally market making, and market making on BitMEX is very competitive, because you're competing with a ton of other people who are all the other shops in the building, basically. Whereas if you go to like a tiny exchange that you have never heard of, like you might be like the only market maker, and there may be not a lot of suitcases, but sometimes the suitcases are big. So I wasn't actually planning on showing this, but this is a very quick overview of one of my market making systems. And each line is when I was able to buy or sell a suitcase. And as you can see here, sometimes the markups are quite insane. So this is 1%, 1.6%. The amounts are crazy because people only came in with like $100. So then I only make $2. But sometimes a little bit bigger here. So here $8. It's been quiet last few days. $18 here. So it's 1% over like a $2,000 deal. This thing almost make $20. So this is not the BitMEX stuff, by the way. This is just some smaller scale, like some small capital stuff. But it kind of shows the point really well. And you can also see that it's quite profitable. So in the last few, I don't do a lot. Actually, the markets are really quiet at the moment, which is when I don't really trade as a market maker. As you can see, like I had 2 trades that were not profitable, but I only lost 16 cents. And all the other times I made money. I'm not making a lot, but market making is definitely, it can be very stable if you can nail the risk side very well. I wasn't planning on showing this, but there you go. Okay. So the last thing I want to talk about very quickly is how given this information and given that you now kind of understand that the market maker is just a currency shop and the only thing they're trying to do is buy and sell as much as possible with the highest markup as possible, like 1%, as you saw, that was crazy. But that's also not on that's not market making between like Bitfinex and GDAX or something, right? Because then you can like if you quote 1% offsets, no one's ever going to buy from you because there will be a million market makers offering better prices, right? So that's on really small, tiny exchanges. But yeah, that said, nonetheless, if you want to get started, market making in crypto is great because contrary to currencies, you don't need to rent a shop at an airport, which is very expensive, and you don't need to hire a bunch of people. The only thing, like if you're a programmer, you can just program your own system. And the only thing you need besides programming is capital, is the money that you will use, like your inventory, to quote. Right? Because if you go on BitMax and you say to Arthur, I'm a new shop, please put me on your list. Arthur will want to see some proof that you have the money to buy or sell, right? So you're gonna need that. But you can start out with small amounts, like the screen, like what I just showed. It's a tiny system with not very much capital in it. I won't go into the specifics, but with a few $100 you can start, and you won't make a lot, but you can definitely play around with it. So a quick note, if you are a programmer and you look into open source stuff, you won't find a lot of really good market making stuff. And that's because, as I explained, it's very zero sum and everyone's competing with each other. So my market making stuff, I'm not going to put it on GitHub, unfortunately. I'm sorry, guys. Because that would basically be me as a currency shop giving, like allowing everyone next to me just to set up their own shop, and then they were all competing with each other. It's similar to arbitrage, which I'm also doing, and it's also very zero sum, right? There's only X amount of money to be made. There's only X amount of volume that all the liquidity is battling for in market making terms. So unfortunately, you'd have to do it yourself. But hopefully this video will go a long way into explaining what you should do. And then whenever you're market making, there are still a million different ways of how you can do it, how you can manage your inventory, how you can come up with quoting, like, so what price will I quote at? And just to give a very simple example, like a most simple form of market making is fully hedged market making, which is you go to two exchanges that have the same market, like Bitcoin dollar. So in this example, this is Bitstamp, and this is GDAX or Coinbase Pro. And they will both have an order book, right? So they're basically two buildings next to each other with different prices, different quotes. So what you could do is you could imagine if you have 4 Bitcoin, you can put 2 Bitcoin, you can put on Coinbase Pro, and 2 Bitcoin you can put it on Bitstamp. And then on both exchanges, you convert one of the 2 Bitcoin into dollars. So now your money is split 50% in dollars, 50% in Bitcoin. And then what you can do is you can look at the price on Coinbase Pro. That was confusing. What I actually mean, go to Coinbase Pro, look at what price people are willing to buy at, which is your sell price, meaning that you can, Coinbase Pro, sell for that price. Now go to Bitstamp and offer to buy 1% or a static number or whatever percent lower than for what you can sell at. And then you just put it in the book, and you will end up being a Bitstamp willing to buy, waiting for whoever comes in with a suitcase. And as soon as that happens, the second you buy on Bitstamp, you're going to go to GDAX, you're going to sell. And you're going to sell for 1% higher because you calculated this beforehand. And if you're able to do that, you'll make 1% profit. That's what I mean. The opposite on Coinbase Pro. So that's a very simple form of market making where you don't, your inventory, like how much Bitcoin and dollar you have, it doesn't really change. Like it changes per venue, but you sync it straight away because as soon as you're offering to buy a Bitcoin with your dollars, as soon as someone then actually goes and sells you, so you buy from him, then on the other exchange you're going to do the opposite, and this hedges you out of the market risk. This makes it so that you don't get overrun as easily, meaning that if you, because market making is quoting on both sides of the book, you're offering to buy and you're offering to sell. And if the price right now is 100 and you're saying I'm going to buy at 100, I'm going to buy at 90, I'm going to sell at 110. If the price crashes to 50, you're going to be fucked. I bleeped out. You're going to be screwed. And so this basic strategy, which is, I call it hedged market making, which whenever you trade, you do the opposite somewhere else. It's very simple and it hedges you from that risk. And then, so what you need to take into account is the costs, right? So when you figure out your quote is basically the price on the other place, or some fair value, or something, it doesn't matter. And then there's fees, because you need to, Arthur is, he's a very nice guy, but in order to go to every floor of the building every hour, he wants some money, right? And as you can see, he wants a Lambo, and Lambos are very expensive. So take into account that there are fees. BitMEX has rebates, but there are fees nonetheless. There's risk. There is, which if you do hedge market making, this is already baked into the price, except for execution risk, which is a bit technical, won't go into that. And then at the end of the day, you want to make some profit. So that's a very simple quoting strategy. You put that into your bot, and then your bot would run this calculation every second, and then adjust the quote at the market, and that's a very simple strategy. Yeah, so if you start Googling, you won't find a lot of open source, but one thing you will find is, where is it? You will find the BitMEX simple market making bot for use with BitMEX, coming from BitMEX. So this is Arthur telling you that it's very easy to set up a shop. You should just do it. You should just download this bot and run it. Set up your own little shop, because he wants to ride in a Lambo, and he can only do this if his building is filled with currency exchanges. So I think that's a nice ending for today. If you have questions or requests for follow-up videos, let me know. I hope you enjoyed this.